Okay, let's go ahead and review the CTA balance audit report. Let's jump into NetSuite to take a closer look. First, let's navigate to our consolidated balance sheet in NetSuite. What we're going to do is scroll down to our equity section and reference the CTA balance at the bottom. We can see here the balance is just over $4 million for the accounting period January 2023. Let's go ahead and click on that balance. NetSuite will take us to the CTA balance audit report for that accounting period. I'm going to move that over here for a second. And what we're going to do now is walk through this report from left to right to get a detailed understanding as to what each column in this report represents. So starting with the far left, the financial row, this section really just lists the GL account in the consolidated trial balance by subsidiary. So if you have a lot of GL accounts, a lot of subsidiaries, you're going to see many, many rows in this report. In fact, we can see here as we scroll down, we have many rows in this report as a result. So let's move on to the starting balance sheet section and notice that the period that's referenced is the period prior to the period in our from section. So this report runs from January 2023. So our starting point is the prior period, December 2022. In terms of the local balance, this is the functional currency balance for that entity in December 2022. The general rate, as you would expect, is the consolidated exchange rate that applies to that particular GL account for the prior period. And then the consolidated balance is what you get by multiplying the two, taking the local balance multiplied by the general rate or the consolidated exchange rate for the prior period. Notice that if we scroll down to the bottom here, the total for December 2022 consolidated balance is $3.277 million. I'm just going to come back here for a second to generate our consolidated balance sheet for the same accounting period. Just while that's loading, what you'll notice is that our CTA balance as of December 2022 is that 3.277 million. So that's how that balance ties back to the consolidated balance sheet. Let's jump back into the CTA balance audit report. We're going to move on to look at the net posting section of this report. First, I want to point out that the period referenced in the net posting section is January 2023. And that's because our from and to periods only reference the accounting period January 2023. If I were to update this to March 2023, you will notice that the net posting section, once the report loads, references January through March 2023, because we're going to look at the movement in our GL account balances within the range. For now, I'm going to set this back to January 2023. Okay, so let's start with the local balance column. Now, this column is as simple as looking at the functional currency balance for that particular GL account and subsidiary, specifically the movement in that GL account for the period that we're looking at. So in this case, we can see that this particular GL account, 1000, our operating account, had a movement in January 2023 of $18,700. That applies to every GL account across all of our subsidiaries. Next up, we have the cash flow rate and the general rate. Before I explain what they are, I just want to jump to a GL account here to show where these balances are derived from. So on every GL account in the system, you will set a general rate type and a cash flow rate type. For the most part, we care about the general rate type because that dictates which consolidated exchange rate the system uses for financial reports such as your trial balance, income statement, balance sheet. But your cash flow rate type is used when preparing your cash flow statement in NetSuite. That's where that's referenced. Jumping back to our CTA balance audit report then, the cash flow rate is the consolidated exchange rate for the accounting period in the to section. So again, if we ran this from January through March, the consolidated exchange rate referenced will be that for the March accounting period. Now we can ignore the cash flow rates included in this report because they're not used, they're really for information only. Moving on to the general rate type then, this is the consolidated exchange rate that NetSuite will use for the accounting period in the to section. To arrive at the consolidated balance, we simply take the local balance and multiply it by the general rate. In other words, we're going to take the movement in the accounting period range we're looking at and multiply it by the consolidated exchange rate for the latest period that we're referring to. Let's move on to the next section, the ending balance sheet. Now notice the accounting period referenced here is January 2023, and that's because that is the period referenced in the to section of our report. Starting with the local currency balance, that is the functional currency balance for each subsidiary for each GL account. In other words, the closing balance as at the end of January 2023 for this particular GL account is just over 11 million US dollars. Now the general rate is the consolidated exchange rate that is applied to each account balance for this accounting period. So we're looking at the January 2023 consolidated exchange rates. We then multiply the two together to arrive at the consolidated balance. In other words, this should give us the consolidated balance sheet. In fact, if we scroll all the way to the bottom, we will see that the total value of our consolidated balance for the ending balance section arrives at just over 4 million US dollars. And you might recall, if we come back to our balance sheet and run it for January 2023, that ties back perfectly to our CTA balance in our consolidated balance sheet of 4041. 4041. Let's move on to the final section of the CTA balance audit report, and arguably the most important, being the CTA analysis section. Let me move that over here. And first, let's take a look at the beginning balance rate difference contribution column. Now, the name of this column lends itself to the calculation behind the numbers. We're going to take the local balance from our starting balance sheet, and we're going to multiply that by the movement in our consolidated exchange rates for the periods that we're looking at. In other words, we're going to take the general rate value from our ending balance sheet, deduct the general rate value from our beginning balance sheet, and multiply that by the local balance. That's going to give us our beginning balance rate difference contribution. And we can see here for this particular account, the general rate type is close to 2 in the ending balance sheet and 1.95 for the opening balance sheet. That lends itself to a beginning balance rate difference of 87,000 US dollars. Moving on to the net posting rate difference contribution. This one is very specific. It's going to look at the net posting section, in particular the local balance, and it's going to multiply that local balance value by the difference between these two exchange rates, the cash flow rate and the general rate. Now, depending upon how you have your NetSuite environment configured, you may have your cash flow rates match those for the general rate. And in that case, if you scroll to the bottom of your report, you may find that your net posting rate difference contribution column nets to 0. And that's typically what will happen when the cash flow rate is set to the same rate as the general rate on all of your GL accounts. Let's scroll back up to the top. The next piece of this is the net posting consolidated balance at the cash flow rate contribution. So what we're doing here is taking the net posting local balance and multiplying that by the cash flow rate. Now again, your cash flow rate may be the same as your general rate, but this is how the NetSuite report looks at this. The calculation is the local balance multiplied by the cash flow rate. That will determine the values in this column. Finally, the total CTA contribution is simply the addition of this column, and this column. So we take our beginning balance rate difference, we add to that our net posting rate difference, we add to that our net posting for the consolidated balance at the cash flow rate to arrive at the total CTA contribution for this accounting period. In fact, if we scroll to the bottom just to validate that, we are saying that the total CTA contribution for this accounting period is $764,000 US. And in fact, we can validate that because we know as of December 2022, our total CTA balance was 3.277 million. That CTA balance updated in January 2023 to just over $4 million. The difference between the two is the $764,000.